Hello students, hope you all are well. Let us start our next video on the basis of elements of accounts part 2 standard 12. Students, the last video which I completed, that was on the basis of chapter 11, that is according to your textbook the chapter number 4 of part 2, which is analysis of financial statement, which is most easiest chapter. Now the left is chapter 12 and chapter 13, but chapter 12 I already completed before chapter 11. And the last chapter, which is chapter 13, according to your textbook, the chapter number 6, which is cash flow statement. Today in this video I will explain in details about the chapter 6 or chapter 13, which is called cash flow statement. Before explaining this chapter, let me explain first the paper style or the weightage of this chapter. Last chapter, that is cash flow statement, the total weightage is 8 marks and you will get total 5 questions. Out of the 5 questions, the 2 questions will come from MCQ, that is section A. 2 questions will come from section B, that is 1 or 2 line question answer, that is theoretical part, and 1 practical sums, it will come from section D, where you will get 4 marks. That means you are total getting 2 plus 2, 4 plus 4, 8 marks. In this chapter, I will give most importance both the theoretical as well as the practical also, because theoretical you will get 2 plus 2, 4 marks, and practical you will get 1 question of 4 marks, total 8 marks of 5 questions. So let us see what is called cash flow statement. The name itself, you can little get idea. The cash flow statement means this is a one type of statement where this statement will show you or this statement will tell you what is the cash flow. The cash flow means the flow are 2 types. It may be inflow or outflow. That means inflow means how much cash is coming particular any periods, or how much cash is going from the business. That statement will show you particular during this period how much total cash came from outside to your business insides, and how much cash has gone from your business to the outsides. That is called cash flow statement. Generally, the concept which you are having in your mind, that profit and loss account, whatever you have done, the final account 11th standard as well as the 12th standard, both the places you have done. In this final account you have seen that mainly the trading account, profit and loss account, and balance sheets. But in partnership final account you have seen so many things: the trading account, profit and loss account, profit and loss appropriations account, partners capital account, and balance sheets. Mainly the final account means trading account, profit and loss account, and balance sheets. So from the trading account and profit and loss account, the trading account you got the gross profit or gross loss, and that you transfer to the next steps in profit and loss account, and from there you got the net profit or net loss. But how much you got the net profit, that does not mean that much cash you got, or if you get net loss, that does not mean that much cash has gone. This concept first you have to get clear. Net profit, whatever you are getting, if suppose if you are getting net profit 40,000, that does not mean that 40,000 cash came in the business. You being a student, you will think like that that 40,000 net profit means 40,000 cash we got, or 40,000 net loss means 40,000 cash has gone from your business. Not like that. Cash how much comes and cash how much goes, that statement will tell you. There are so many expense or loss which you wrote in trading account or in profit and loss account, either in debit side or in credit side, where it affects the net profit, but the cash has not gone from the business or cash has not came inside in the business also. Like that, some situations will be shown. I will explain in detail slowly one by one. Why I am giving most importance for the theoretical part of cash flow statement? Because the two questions of MCQ and two questions from section B are included. Actually, what profit and loss account we are doing, that is in brief the profit and loss account which is prepared on a mercantile basis. Mercantile basis we are using the profit and loss account. It shows the profitability of the business. Balance sheet provides the information about the economic solvency. The purpose of profit and loss account, what is there, but purpose of cash flow statement are not same. Because profit and loss account we are prepared on the mercantile basis and it shows the profitability of the business, but balance sheet provides the information about the economic solvency. Let me explain this one so that it will be clear for you what is given in this textbook. Beside profit and loss statement, balance sheet cash flow statement is also included. What is telling? Beside profit and loss account statement and balance sheet, cash flow statement is also included as the component of the financial account. Financial account component, cash flow statement also a component. Among all these assets of the business, cash is the most liquid assets. You are having assets that you know in the balance sheet, asset side you are writing, cash also you are writing, or bank balance also you are writing. Cash and bank balance is the liquid assets. Cash does not give any direct return unless it is invested. As for example, you have 1 lakh and for 1 year you have kept in the locker. This will not give you any return. Cash, if you keep in your business, either in locker or in your cash box, after a year or two the balance will be the same. There will be no more fund, or fund will not increase. So if this 1 lakh is deposited into the bank and invested into a share or debenture or invested in any other opportunities that would generate interest, dividend or profit, matlab they are telling that one, if you are keeping cash with you, there will be no return. With you means in your business. But instead of that, if you apply this cash or if you invest this cash either in the bank or in any financial institutions, or if you buy the share or debenture, then you can get the interest or dividend which will increase your cash balance. Thus the investment of cash is very essential creations for the rewards and earning. The source from where you will get the cash. The source of cash and applications of the cash. The sources of cash means cash inflow and applications of the cash means cash outflow, where you are applying this cash and where from you are getting the cash. Where from you are getting the cash is called cash inflow and application of the cash is called cash outflow. Both the decisions are most important. They are telling that from where you are getting the cash and where you will apply the cash, this is the most important. If you are doing something wrong, the business will get the loss. It is desirable to procure the cash from an appropriate source. At the same time, it is important to invest the cash in appropriate opportunity. They are telling that one, it should be taken from appropriate sources also. Suppose if you are taking cash with less interest, that is called appropriate source. If you are taking cash with more interest, that is not appropriate source. And similarly, the applications of the cash also should be in proper place and it should be appropriate. This information is not disclosed by the profit and loss account and balance sheets. Balance sheets and whenever you have done the final account, that time this is not explained there. Final account is telling how much you got the gross profit or net profit, or balance sheet is telling what is the financial positions of the business. But where from you are getting the cash, or where you want to apply the cash, that is not given in the profit and loss account statement or final account, either in the profit and loss account or in the balance sheets. There are the different objective to prepare this statement. What are the sources of the cash and where the cash invested? This is called what are the sources of the cash, means where from you are getting the cash, and where cash is invested, matlab what is the applications of the cash. This information is available from the cash flow statement. कैश फ्लो स्टेटमेंट में ये इंफॉर्मेशन आपको मिलेगा, कहाँ से कैश आ रहा है और कहाँ कैश जा रहा है. Therefore the preparations of the cash flow is mandatory and for certain business enterprise, so that the investor can take their decisions in the appropriate manner. So investment, those who will want to invest the money into your business, by seeing the cash flow statement, it will be easy for them to take the decisions. Next is coming the meaning of terminology. There are so many terms we are going to use in this chapter. That is, one by one I want to tell you the meaning of the terminology. That is cash flow. Cash flow, at beginning I told, cash flow means it may be inflow or it may be outflow. There are the two types of cash flow, cash inflow and cash outflow, what I told you. Here, the cash inflow means the receipts and payment of cash and cash equivalent. This is the most important things which you have to understand. Cash equivalent. Cash inflow means receipts and payment of the cash and cash equivalent. Cash means the cash balance, either in the cash balance, the balance which you are keeping in your cash box, or the bank balance. Cash equivalent means there are so many things are there which is equivalent to cash also. Generally we are telling the current assets and current liabilities, debtors, bills receivables. Debtors, bills receivable, short-term investment, short-term loan, these are called generally cash equivalent. So whenever I will use the word cash equivalent, that time you have to keep in mind that current assets and current liabilities, these two also are called the cash or cash equivalent. Whenever cash inflow or outflow we will calculate, that time the cash equivalent also we will consider. We will go in details afterwards. The transactions due to which cash or cash equivalent increase, कोई ट्रांजैक्शन के लिए the transaction due to which cash or cash equivalent increases is known as cash inflow. मतलब जो ट्रांजैक्शन के लिए आपको पास कैश आ रहा है, that is called cash inflow. The transaction due to which the cash or cash equivalent decreases is known as cash outflow. The difference of cash inflow and cash outflow is called as net cash flow. Suppose you are getting cash 5 rupees and you are giving cash 3 rupees. That means net cash inflow is 2 rupees. So the difference between the cash inflow and cash outflow is called net cash flow. This difference can be as follows. Suppose cash inflow is 1 lakh. During this year, you receive the cash from outside in different sources, which is 1 lakh, and you applied this cash of 85,000. That means net cash inflow is 15,000, which is plus. Similarly, it may be minus also. Suppose cash inflow is 85,000, but cash outflow is 1 lakh. That means net cash outflow is minus 15,000. You have received cash 85 and you applied cash 1 lakh, means minus 15,000 is your net cash outflow. Net cash outflow, this is called net cash inflow. Second point, cash. Cash means cash on hand or bank balance. I told cash means cash on hand or bank balance. Or cash equivalent, which I told, that which assets you can easily, assets or liabilities, which assets or liabilities we can easily you can convert into the cash, that is called cash and cash equivalent. Generally, current assets and current liabilities are called cash and cash equivalent. Cash equivalent means the highly liquid short-term investment, not long-term. Such investment which can be quickly and with appropriate estimate price convertible into the cash, which can easily convert into the cash. The investment in which the risk of changes in the price is very rare. It may be the government securities or any other securities having above the stated features. Now, cash flow statement. Now we are going to know about the cash flow statement. All these places from where you listen very carefully what I am telling in my own language, which will help you to make you understand easily. The cash flow statement means from wherever you are getting the cash. From where you may get the cash? Of course, you have to get the cash if you sell the assets, or if you buy the if you sell the assets, you will get the cash. If you sell the goods, you will get the cash. So, where from you are getting the cash? Again, where to you are applying the cash? Suppose you are paying the salary, so cash is going out. You are buying the assets, cash is going out. You are issuing the share, cash is coming in. Like that, if I find out each transactions one by one, where it will affect to the cash, either it's coming or it is going. All these transactions where it is affecting either in cash inflow or in cash outflow, that are classified into three parts. One is called the operating activity, and is called the investment activity, and third one is called the financial activity. Once again, I want to explain this one very clearly. Transactions for due to cash comes or cash goes, either cash inflow or cash outflow. Like this, all transactions are classified into three parts. One is the operating activity. From operating activity, cash comes and cash goes. From the investment activities, where cash comes and cash goes. And from the financial activities, where from cash comes and cash goes. Now you have to understand that which are the transactions which is coming under the operating activity, which are the transactions and it is coming under the investment activities, which are the transactions where it is coming the financial activities. For that, I made one format or the chart. From there you can easily understand where from cash comes, where from cash goes. Either it is your operating activities, either it is your investment activities, or it is your financial activities. All these three activities, the operating activities, cash may comes, cash may goes. Or that means I want to tell you that cash inflow and cash outflow both are there. For investment activity, cash comes in, cash goes out also. And for financial activity, cash comes in, cash goes out. Let me explain these three. After that, I will tell you how cash comes in and cash goes out. The format of the picture of the final account, every one of you know. That is clear to you. This is called a format of the pictures of the final account, where trading account and profit and loss account together I wrote. This is a trading account and profit and loss, trading account and profit and loss account for the year ended. And here I wrote the balance sheets. Every one of you know the balance sheet right hand side is called the assets and left hand side is called the liabilities. In asset sides, generally the two type of assets comes. One is the fixed assets, another is the current assets. And here also generally two types are coming. One is the equity and liability, where the shareholders funds or long term loan or non-current liability is coming. Another one is coming the current liability. And this sides trading account and profit and loss account together I have done. So generally what you used to do, you are writing here one by one all expense. This is your expense sides, and here you are writing the all income, which is your income sides. Now, and here either you are getting the GP or net profit, gross profit or net profit. As we are doing together, so we are getting net profit here. Suppose if you are getting net profit 40,000, that does not mean 40,000 cash you got in the business. I want to explain from this chart that which of the transactions are related with operating activity, which are the transactions related with investment activity, and which are the transactions are related with financial activity, which is given it there. Operating activity, investment activity, and financial activity. Here, the 3 steps I will tell you. This all trading account, profit and loss account together. Trading account and profit and loss account, obviously this is income sides and this is expense sides. Income sides means cash is coming, cash inflow, and expense side means cash is going, cash outflow. So this is called the operating activity. This is called the operating activity. That means the transactions which is coming, not all. Obviously we have to keep in mind. But I want to tell you the transactions which is related with the trading account and profit and loss account, that type of transactions are included in operating activity. But exceptional cases are there. Not all, but most of the transactions, operating activity means that business of you are operating the business. Operating means you are dealing. For dealing this business, what are the expense you are doing, that is cash is going out, and what of the income you are getting, that is cash is coming in. So those transactions which are related with trading account and profit and loss account, either in debit side or in credit side, that is coming under the operating activity. But apart from that, these current assets and current liabilities, this is called cash and cash equivalent. It is called cash equivalent. Malab, I want to tell you the transactions, clearly I want to tell you the transactions which is related with the trading account credit side or trading account debit sides or profit and loss account credit side or profit and loss account debit sides or current assets or current liabilities, these all are coming under the operating activity. Once again I want to tell you, operating activity means trading account and profit and loss account, debit side and credit side both, plus current assets and current liabilities also. If any transactions due to that the current assets is increasing or current asset is decreasing or current liability is increasing or current liability is decreasing, that type of transactions also will be considered as a operating activity, because this is called cash equivalent. Beginning I told easily it can be converted into the cash. As per example, if I say suppose that debtors, bills receivables, these are coming here, and this is creditors and bills payables. So assets is increasing or decreasing, the cash will affect inflow and outflow. Similarly, current liability is increasing or decreasing will affect the cash inflow and outflow. Here also, if transactions are coming this side, means cash is coming in. If this side transaction is coming, cash is going in. But keep in mind, not all transactions, most of the transactions which are not coming, that also I will tell you. One or two let me say so that you can understand. Suppose it is given bank interest 500. Bank interest 500 which you wrote profit and loss on credit side. Is it correct? This side suppose by sale you wrote 10,000. By sale is your income, cash is coming in. By interest also cash is coming in, but this is called operating activity. Operation करके आपको ये मिला, but this is not called operating activity, because bank interest, as you invested money, for that you are getting bank interest. बिजनेस को डील करके आपको ये पैसा नहीं मिला. You have invested money into the bank, for that you are getting the interest. So this is called non-operating income. Okay. Now details I will come afterwards. So operating activity means trading account this sides plus current assets and current liabilities. It's called operating activity. Now investment activity. Fixed assets. In asset sides, the two type of assets you are getting, one is the fixed asset and is the current asset. Fixed assets, either it is increasing or decreasing. If fixed assets is increasing, cash is going out. If fixed assets is decreasing, cash is coming in. Suppose if you are buying one fixed asset, cash is going out. So the transactions which is related with the fixed assets, either it is coming or going, that is coming under the investment activities. So this is called investment activities and this is called financial activities. And the transactions which is related with the liability side, shareholders fund or long-term loan or current non-current liabilities, that is increasing or decreasing. Suppose if you are issuing the share, cash is coming in. If you are doing redemptions of the debenture, cash is going out. So the transactions which is related with that shareholders fund or non-current liabilities, that transactions are coming under the financial activities. So why I have taken these balance sheets, trading account and balance sheets? Once again I want to tell you that the three steps are there. One is the operating activity, and there is the investment activity, and there is the financial activity. Trading account debit side and credit sides plus current assets and current liabilities related with transactions if it is coming, these all are coming under the operating activity. Fixed assets का ऊपर कोई transaction आएगा either increasing or decreasing, that is called investment activities. And shareholders fund or non-current liabilities का ऊपर कोई transaction आएगा either it is increasing or decreasing, is coming financial activity. So this you have to get the idea, the operating activity, investment activity and financial activity. Here I want to explain it clearly so that you can get full idea about that. Here it is said in that, see here, profit and loss account. Profit and loss account credit sides, operating income. Profit and loss account means profit and loss account and trading account together. Profit and loss account credit sides, operating income. Profit and loss account debit side, operating expense. Profit and loss account credit sides, some of the income may come, like the bank interest, that is not operating income, that is non-operating income, it may come, which will be deducted, that will come afterwards. Profit and loss account debit side, some of the expense which is called the non-operating expense. Sometime it may happen, suppose financial expense or non-cash operating expense. Non-cash operating expense, what is called non-cash operating expense, I will tell you. Suppose depreciation. Here you writing 2 depreciation, but amount of depreciation it has not gone out from the business. That is called non-cash expense. Okay, and you are getting the balance sheets. Balance sheet I told you, the current assets and current liabilities operating में जाएगा, और non-current assets which is called fixed assets, that is investment activity में जाएगा, or shareholders fund and non-current liabilities which will coming financial activities. So 3 activities you understood. Now let me come that in cash flow statement, activity of specific period are classified into 3 categories: operating activity and cash flow from operating activity, investment activity and cash flow. Cash flow means inflow and outflow both. Cash flow from investment activity and financial activity and cash flow from financial activity. These two, point number 2 and point number 3, is also called non-operating activity. This is called operating activity. This is called non-operating activity. This is also called the non-operating activity. Okay. Now we are coming the operating activity and cash flow from operating activity. Operating activity, the definitions already I told. It is coming in the trading account and insurance company or bank, wherever from it is coming. Generally, by dividing the firms of the company into the 2 categories, that is clarity can be obtained. That is called non-financial companies and financial companies. Here no need to go in details. Here you come, I want to explain in details the page number 253, cash flow from operating activity. Now first you come operating activity. Operating activity means you understand the trading account debit sides, trading account and profit and loss account debit sides, as well as the trading account and profit and loss account credit sides, but not all, exceptional cases are there. Apart from that, also the balance sheets, current assets and current liabilities also are there. The cash flow from operating activity, that non-finance company and finance company. Generally, what we have learned, that is called non-finance company. The finance company नहीं है. Finance company means bank and others. Non-finance means trading business, where from cash comes and cash goes. Income received from sale of goods, that you understand, where from cash comes. Income received from commissions or royalty. Any other income which is not arise from the investment activities. Collections from the debtors. See, collection from the debtors is coming, cash coming, and bills receivable, that is called cash equivalent. Payment of purchase of the goods and services. Payment, that is cash is going out. The payment or to creditors. Here collection from debtors, but payment to creditors, that is called current assets and current liabilities, which is coming cash equivalent. Salary, wages, any other purpose, for that where from cash is coming and cash is going, inflow and outflow. फाइनेंस में क्या होगा, परचेस ऑफ फाइनेंस कंपनी का परचेस ऑफ सिक्योरिटीज, इंटरेस्ट पेड on deposits or loan, sale of securities, interest received on securities, interest received on lended loan, salary or amount paid to the employees, as for example bonus, receipt of income tax refund or payment of the tax or any other investment financial activities. Now I will explain in details the illustration wise. So in next video I will go in details about the next illustration. Hope you are understanding. Okay, bye.